Hey guys, Ryan Hamer here. Hope you guys are doing well. Thanks for taking the time to watch this video. And before we get started, I want to encourage each and every one of you to like and share and subscribe. And also, please feel free to leave comments. Let me know what types of videos you'd like to see me talk about. And on the side of this video, I'm going to include a link so that if you have any questions and you want to connect with me for a strategy session, you can do that, as well as if you have a problem and you want to hire me to see if I can help you out, there's that link there as well. And you can also join my mailing list. So without further ado, today we are talking about improving your credit. How do you rebuild your credit? A lot of my videos are about, okay, I've already messed up, or maybe I've made a mistake, or something's happened to me. How do we fix it? But what if you're in a situation where you have no credit? And as I always say, no credit whatsoever is a lot worse than having bad credit. And the reason for that is you don't have anything for a lender to measure or compare to, right? So you have nothing on your credit bureau report. They don't know who you are. They don't know how you handle money. They don't know whether you're good with money. They don't know whether you're responsible with debt. They don't know whether you are capable or reliable. So these are things that are really, really important. A lender always wants to know what your history is. If you have no track record, think about it like when you first meet somebody and you want to date them. If you don't have any inclination as to who they are or what kind of person they are, you're going to be a little wary. But I know what you're thinking. You're going to say, well, how are they going to get to know me if they don't give me a chance? There's the rub. It's just like the job. How do you know, how are you going to hire me, or how are you not going to hire me if you don't want to give me a chance because you think I don't have experience? Well, I always liken it to the old commercial. There's this commercial where these two old guys are sitting down and they say the banks are more likely to give you money if you look like you don't need it. It's so true, but it doesn't make any kind of sense whatsoever in the real world. So how are you going to establish yourself in the minds of a financial institution as a credit, as a worthy risk for them to take? One way you can go about doing it is if you have no credit whatsoever. And when we say credit, we can say credibility, because you have no credibility with the financial institution. So what you can do is you can go to them and you can say, well, hey, look, I want to get a secured credit card. Do you offer any programs or any options like that with your financial institution? So there are certain banks that offer that, and your bank might be one of them. So what you want to do is you want to pick up the phone. I always recommend go into the branch, because it's a different scenario when you go into the branch and you actually speak with a financial advisor at the branch. You speak with the branch manager. They're more willing to assist you and help you, and they're familiar with what programs they might be able to push through and offer you at the branch level. And the manager has some discretion with regards to what he or she or they will be willing to flex and provide you with. So if you're speaking to a financial advisor at the bank, they can go to the manager and they can say, hey, you know what, I've spoken with this individual and this is what they're looking to do. They're trying to reestablish themselves. They had a rocky marriage. They're out on a divorce. She took everything from him, or he took everything from her. He left her high and dry. And there are many reasons as to why somebody is starting from rock bottom, ground zero, and they're going to need to start all over again. You might have been the victim of identity theft. You might have lost your job and then lost everything. You might have lost your house. COVID wiped a lot of people out. And one of the prime examples and reasons as to why things sort of take a downward turn financially is you might lose your job, or it's a marriage breakdown. It happens a lot. And first thing I want to say, as you're starting out and as you're rebuilding, forgive yourself and realize and recognize that it is not your fault. It's hard to hear, it's hard to say, but sometimes nobody's ever going to tell you that. Nobody's going to tell you that it's not your fault. They're just going to assume that it's your fault. But I want you to get into the right mindset as you're going to rebuild and reestablish your credit. Whatever mistakes you may have made previously are irrelevant right now. The purpose of you moving forward is that you don't look back. And to move forward, you have to let go of the regret, the pain, the anger, and the frustration of whatever happened before. So, getting back into it now, you also, when you're talking to the branch manager or the advisor, you just let them know where you are. Be honest with them. Don't lie. Don't hide anything, because they're going to find out anyway. They're going to end up pulling up your credit bureau report. And when they pull up your credit bureau report, they're going to see what's there. So, tell them truthfully, speak honestly, speak from the heart, and just explain to them that you'd like to reestablish yourself. And most financial institutions are always on board with that. Because if they are good to you, and once you get back on top and you reestablish yourself, you get good credit, you're going to want to get a credit card with them. A real one that is not secured. One where you don't have to put up your own money as collateral, which is what a secured credit card would be, which is my next recommendation. So you want to see if they have the secured credit card option for you at that financial institution. Now, Capital One offers a secured credit card. They actually offer a couple. One is with a low interest rate, and then one is with a regular interest rate, but you have to put up your own money. So, and they're not really a bank per se. I always suggest that you establish yourself with a financial institution, with a bank in your area, one that you can easily access and get to, and then you speak with somebody, and then you say, hey, this is what I need, this is what I want, and somebody's always willing to help you with the bank, for the most part. If they don't offer that, if they don't offer a program, or they don't have a product that could work for you, then go to another bank or call another bank. So there is, as I said, the secured credit card option, and then you can also, if they say that they can't give you that, then say, well, listen, what if I was able to put up a $500, and can I take a loan against that money? Can you use that as collateral? $500 or $1,000, would you be able to use that money that I gave you as a secured collateral for a loan? And see whether they do that. It's a way of you reestablishing yourself with a financial institution, and they're seeing who you are and seeing whether they can, accommodate you. And then if you do that, after X amount of time, once you pay back that money over whatever term, they might offer you something. Typically, when you go to the bank and you open up a brand new bank account, they may offer you something based on your credit score. But because you're too new, not yet rated, you have nothing on your credit score, your credit report rather, it's hard for them to offer you anything, and they can't help you in that regard. This is where the saying, one must help themselves, comes into play. So if you have money, but you just don't have good credit or any credit or reestablished credit, then this is the way to go. So now also, banks have different things that you can leverage and utilize. So they also have TFSAs, and they also have RRSPs. RRSPs are good because the money is locked up and it's tied and you can't get access to it. And so say you have $3,000 or $2,000 and you don't really need it for anything in the moment, and you can lock that $2,000 up, or how much ever that money is, in an RRSP. At least the bank will see, okay, well, he or she's taking that money and they're putting it in an RRSP. They're investing in us. They're trying to buy products or what have you, trying to invest in products. So that looks good too. TFSA, that's good as well, but you have the ability to go and pull that money out from that TFSA without penalty. So that's something to keep in mind as well. When it comes to secured instruments, banks like to see that you have money in those secured instruments, because it allows them to say, okay, well, they came here a year ago and they didn't have anything. They had no kind of credit. We gave them a secured loan against their money, and they've been paying it back faithfully for 12 months, 6 months. They also put money down and got themselves a secured credit card. I see that they've made timely payments, never been late, everything looks good. That's amazing, that's great. And then they're more willing to provide you with a potential product later. And these decisions are made at the branch level or the bank level. And if they're not made at the branch or bank level, they are able to look at what you've done, and then they're able to provide you with maybe something special that's not on the books, it's not advertised. So that's also something that you can keep in mind. There's an outside of the bank, there are other institutions that offer loans that you can utilize that will help you improve your credit as well. So one of the fastest ways too is to get a car loan. Some of you may drive, some of you guys out there may drive, or some of you out there might be interested in that option because it allows you to go and get a car loan and get a car at the same time. And that way you'll be able to, maybe get another job or commute further or what have you, and you make a payment each month. Now, I must caution you and warn you that when it comes to car loans, they're not being altruistic, okay? Yes, you're getting a car loan, but the interest is most likely going to be higher because you don't have established credit. So your interest rate for the loan can be double digits or up in the higher single digits. And sometimes they can be in the teens, they can be in the 20s. I don't really recommend you getting a car loan that's up in the 20s or in the teens for that matter, but you got to do what you got to do if you really need a car. The whole concept of a car loan is that sometimes it provides a lender with an idea that, okay, a car is a very big responsibility. Nobody wants to get the car repossessed. So once you're making those timely payments for that car, then it shows favorably on your credit bureau report because that's a larger loan. Typically, a car loan can range anywhere from 15 grand to 20 grand to 30 grand to much higher. But I don't recommend you go and get a Cadillac or anything like that. Live within your means. When it comes to getting loans and stuff like that, always get something that you can afford. Just because it looks nice, the car is sexy and attractive and all that, and you like this car, what have you, don't get caught up in the glamour and the glitz because, it's not glamorous when that car gets repossessed. It's not glamorous when you can't foot the bill at the end of every month. You always want to make sure that you are aware of the total price, the cost of borrowing, and how much the cost is each month. Can you afford it? And don't forget, you still have to deal with the license and administration as well as insurance. Rule of thumb for me is if I'm getting a car, when I look at the car, I have the model number, I call the insurance company right away to get quotes on that particular model before I even think about getting the car. Because the problem is a lot of people fall in love with the car without getting the insurance first, and that can mess you up big time. So just to recap, we've talked about rebuilding your credit or establishing your credit with a secured loan, secured credit card, and also applying for contributing to an RRSP with a financial institution or a TFSA. The purpose of these two instruments, or there's also a GIC. I forgot to mention the GIC. The purpose of these instruments is to show the financial institution that you may have a large amount of money, but you're not afraid to part with it to invest in something that will better you. So an RRSP, TFSA, or GIC. These instruments will allow the bank to establish a relationship with you because you're holding the money, it's secured, and it's in there, and it's registered and all that stuff, and you're good to go. They will see that at the end of the year or the end of the term or whatever, however you go about it, and it will work out in your favor if you try to have a relationship. If your goal is to have a relationship and establish a relationship with that financial institution so that you can apply for a credit card, apply for a loan, see if you can get overdraft, see if you can get a line of credit. These are things that are later on down the road, not immediately, not right away, because of the fact that, again, you don't have established credit yet. And as we said, the most important thing that you can do is establish credit, because once you have established credit, it's like oxygen. It is like oxygen. So there are a lot of you that might be in the 300s, 500s, 400s, 600s. You can be anywhere along the spectrum and you want to rebuild. You might have just come out of a bankruptcy. You might have just come into this country. And if you've just come into the country, there are lots of newcomer programs of financial institutions that will allow you to establish credit. And provided that you can show that you are a newcomer to the country, then the bank will have a lot of opportunities for you. It shows you want to establish security with the bank. So those instruments I told you about before, that allows you to establish security with the bank, and so that they can know, like, and trust you. What else did I need to tell you? Yeah, I think that's about it. Oh, credit cards. So be aware of the interest rates on the credit card. If you do not get a credit card with a financial institution like your bank, you may end up getting a credit card from outside the realm of like the 3 banks, or still, sorry, the 5 big banks, what have you. If you do that, be aware that the interest rate most likely will be a lot higher. And there are fees associated with secured credit cards as well. So they ding you with, like, of course, over limit fee. I mean, that's standard on every credit card pretty much. But if things don't go through, if you max out the card, over limit fees, as well as, if you call in for customer service and stuff like that, they can have fees on top of that. So be mindful of what fees are associated with the card. If you're dealing with like a CIBC or a BMO or what have you, it's not going to be like that. However, they will ding you if you do go over the limit. So I think that's a standard. So I hope you found this information helpful with some ideas on how to reestablish your credit. And also, it's always important that you take a look at your credit bureau report. Always get an idea of what's there, where you stand, what your credit score is. And to get an accurate representation of where your credit score is, I always suggest that you look at the credit bureau specifically, like Equifax or TransUnion, to see what numbers they're giving you. And then also what you can do is, if you decide to go compare that with Borrowell, or the other one there, it's Borrowell, and then there is Credit Karma, yes. Remember, all the credit scores are different amongst these different institutions for different reasons that I won't get into in this video. But if you want an accurate representation of your credit score, check the credit bureaus first. That's what you should be using and relying upon. And you are also able to request a copy of your credit bureau report in writing each year, and it is free. You should not be charged for your credit bureau report if you request it in writing, and they'll give you a single copy of it for free. Yes, they do have monthly programs where you can, you pay per month to be able to access your credit bureau report and monitor changes, and there's absolutely nothing wrong with that. There's nothing wrong with doing that, so you are always aware of where you stand and if there are any changes. Thanks for taking the time to watch this video. If you have any questions or concerns, again, please feel free to like, share, subscribe, click the notifications button so you're always in tune for any updates and new videos, and sign up for my mailing list. The link will be on the side, as well as if you want a personal consultation with me, there is a link there for you as well. Thanks for watching, and have yourself a great day. Until next time.